Little known fact, Volkswagen has half the debt of the entire country of Russia. Volkswagen's CFO has just said that Volkswagen is financially ready for the electric disruption that's about to happen, or that's happening right now. Is this actually true? Let's have a look. Hello, my friends. Welcome to the channel. I'm the Electric Viking. Great to see you. Welcome to all the new subscribers to the channel. Welcome back, everyone else. Thanks for tuning in. Thanks for supporting the channel on Patreon. I'll put a link in the description below. And thank you to those of you who are members of the channel. I'll put a link in the description below to how you can become a member as well. Volkswagen. I have reported on this company many times. I was quite bullish on them for a little while there when Herbert Diess was pushing electrification hard, and when he was trying to kind of work with Elon Musk in order to get Elon use his influence to push Volkswagen as a company to move towards electrification faster. He was trying to encourage the company, which is enormous. It's a massive conglomerate. I mean, it's the most indebted company in the world, and it still makes a profit, but it is the most indebted company in the world. And he's aware of that. He's aware of the massive financial risks that the company has. He put his neck on the line and they fired him. Why? Because truthfully, Volkswagen is making a lot of promises about EVs, but right now the reality is, this is the reality. Let me show you. The reality is, this is electric cars, right? This is gasoline powered cars. They're the old, this is the new. Right now, about 6% of Volkswagen sales are these, 6%. 94% are these. Is that a company you feel confident will succeed? They very well may succeed, but right now they are selling old products, which are fine now. Most people are okay with that now. Will most people be okay with buying an old product in 8 years' time, in 2030? No, they won't. Of course not. And anyone that tells you they will is absolutely insane. You should not take anything they say remotely seriously, because the reality is that the horse and cart was a wonderful form of getting around for a long time, until it was very quickly replaced by cars. What person who could buy an automobile and chose to buy a horse and cart did so? I would say probably almost none. That's the situation Volkswagen are currently facing, and I think they know it. Volkswagen CFO Arno Antlitz said that the auto group is in an excellent financial position to fund electrification. That may be true today, but will it be when they actually have to go about funding, completely changing almost everything that they sell from one type of product to another? Well, that's a good question. I think it's a good question anyway. Now, according to Reuters, the Volkswagen CFO clarified that he believes the auto group is financially ready for electrification from the auto group's Porsche IPO today and Volkswagen's relatively high operating profit margin. Continued investment into electrifying their offerings will be possible, but the CFO has plans to get more liquidity to fund electrification. And I mean, obviously, why did Porsche have an IPO in the first place? It's for one key reason: liquidity. If the company if it was 100% confident that it had enough liquidity to fund its future electrification plans, why did it go public with Porsche? That's my rhetorical question to you guys. Let me know what you think in the comments section below. From the CFO's comments to Reuters, Volkswagen has acquired roughly 9.6 billion euros from their Porsche IPO today. While the brand's operating profit margin of 7 to 8.5% will aid in funding electrification. Now, keep in mind, Volkswagen has admitted they don't make a profit selling EVs now at all. So that 7 to 8.5% purely is coming from gasoline-powered vehicles, which they won't be able to sell in 2030. That's really important to remember. So Volkswagen has to go from a position of making a net negative on their electric vehicle sales to making a net positive of a minimum of 8%. They need a minimum at least 15% swing in profitability on EVs. So that's quite a change, right? Is it possible? That's the key question. I don't think the CFO answered that question. And I think that's a question he really needs to answer. That's the question the media should be asking. The media shouldn't be saying, are you in a position to fund electrification? I mean, because the real question here is, are you in a position to be able to make a profit selling EVs when that's all you sell in, say, 5 years, 6 years, 7 years time from now? That, in my opinion, is not a question that Volkswagen have been asked, and it's not a question that they're answering. In my opinion, if they were 100% confident on that question, they wouldn't have had a Porsche IPO in the first place, and they wouldn't have been about to do what they're about to do, which is what? Well, Volkswagen is now considering offering an IPO for its battery division to continue raising more funds. If they had enough funds, why are they trying to raise more funds? Well, maybe they do and they just want a bit of extra cash. I don't know. The CFO did not clarify a timeline for this IPO. While the Porsche IPO was a success story for Volkswagen's financials, the CFO stated that other than the battery division, no other IPOs were expected, such as from the other Volkswagen luxury brand Audi. Now, to be honest, the entire Volkswagen portfolio is exceptionally confusing. Volkswagen is actually a listed public stock, but they're saying that Audi is not, although the Volkswagen Group in general who own Audi are. Personally, I find it very difficult to understand the structure behind the Volkswagen Group. I think everyone does. If you look at a spreadsheet on how this all works, it's baffling. You almost need a PhD to work out what exactly is going on in terms of Volkswagen Group structure. I haven't yet met a single person who fully understands exactly how it works. That's why I personally am never interested in buying into this stock, because if I don't understand something, or I don't feel like I understand a stock 100%, I'm not going to go near it. That's just me though. Let me know if you're invested in Volkswagen. And if you are, let us know why that is in the comments. I'm sure there's other people here that want to know about why you are and why you think Volkswagen will succeed. Now, I'm not saying you're wrong. I'm just saying I want to know what you have to say. Many people who are invested in the auto industry have been worried that ongoing supply chain issues would mean that large legacy brands would have trouble securing desperately needed capital for electrification. Volkswagen has shown they are resilient despite these changes. The next big concern for Volkswagen might not be securing capital today, but like I said, selling EVs in the future. Teslarati said that Volkswagen's electric vehicle offerings across its numerous brands are sparse, especially in the United States and, well, even in China as well, which is, by the way, their number one market for profit. That's where more profit comes than from Europe. Not many people know that. I mean, people on message boards are constantly saying China and the US are irrelevant to Volkswagen. But the truth is, put China and the US together, and well, yeah, that's about 60% of Volkswagen's profit. So if they lost China and the US, Volkswagen would be bankrupt within probably a year. That's the reality. So they do need the Chinese market. They do need the US market. The next big concern, says Teslarati, for the Volkswagen Group might be securing capital in the future when things start to look very different, when there is, well, virtually zero demand for gasoline powered vehicles. So what are the potential risks and downside for the company? Because clearly Volkswagen, they're not really telling you that. They're more focusing on their upside, and they do have some upside. They very potentially could come in and, I mean, think about it. Which companies are going to get eaten first, right? If a bear is chasing a group of people, you just don't want to be the person at the back of the group. They're going to get eaten first. Companies will be eaten first, such as Mazda, right? Japanese car companies more than likely will be eaten first. They're the ones least prepared for electrification and really least interested in electrification. They're doing it begrudgingly. So Volkswagen certainly may not be in that group at the back, right? They're not a Japanese automaker. However, one of the main potential risks I see with Volkswagen is their debt. With more than 239 billion US dollars in debt, Volkswagen is by far the most indebted company in the world. The thing is though, much of that debt is tied to the large financing division in the company. So some people say that a lot of that debt is good debt. Although Volkswagen is innovating and continuing to set themselves up for future growth, their high debt could cost them in the future, as net income growth and free cash flow growth could be inhibited. If the company can't continue to grow cash flows and net income, the price of the stock could end up staying flat or declining. Another risk I see with Volkswagen is a decrease in production due to the microchip and semiconductor shortages. If Volkswagen is not able to produce as many cars due to these shortages, the sales of the company could decline and revenues could decline as well. The other potential risk that I see for Volkswagen is the potential for a decline in revenue growth. As I mentioned earlier, going fully electric is not easy, and Volkswagen have not disclosed the actual losses they make on each EV. They could be worse than what we think. They could be better than what we think. We don't know. And if they're not willing to disclose this information, then the question is, why are they not willing? In my view, most of the risk that I see with Volkswagen lies in the company itself, not so much in outside factors. If Volkswagen can increase revenues and free cash flows and find a way to deal with the ongoing microchip shortages and part shortages that they're facing right now, and if they can continue to attack the electric vehicle market, then they could end up being a leader in the automotive industry. But that's a lot of coulds. And frankly, the risk here with this company, with more debt than any other company in the world, is enormous. That said, Volkswagen is still perceived by the large majority of people in Europe in particular to be a strong company with a strong history. People have quickly forgotten Dieselgate, which cost the company around $30 billion US. Let me know how you feel about Volkswagen's prospects over the next decade. The truth is, absolutely anything could happen. Thanks for watching, my friends, and I'll see you again on the next video. Bye-bye.